Your company's long-term success depends on parts like your ability to manage your taxes or hire someone who will help you manage your taxes. Paying taxes like federal income tax, Social Security tax, and Medicare tax is something that you have to fulfill monthly, quarterly, and yearly as it is part of your obligation. The FUTA tax is an employment tax you ought to be aware of. Keep watching to find out more. FUTA tax. FUTA means the Federal Unemployment Tax Act. It is a federal law that requires all employers to pay unemployment taxes. They use these taxes in funding the federal government's oversight regarding the unemployment program in all 50 states. Usually, the FUTA tax is only paid by employers, and there are only two ways with which you can manage this tax, which are get the tax deposited each quarter, always try to file an annual form. State programs. Each of the 50 states has its unemployment tax for funding unemployment benefits. There are several names for state unemployment taxes as the name depends on the state. FUTA tax, state unemployment insurance, and reemployment taxes are the terms you can use when referring to state unemployment taxes. When a state lacks enough money to complete the payment for unemployment benefits, the state will decide to get some money borrowed from the federal government. The FUTA taxes are the source of funds for the federal government. FUTA Tax Credit. Employers who take it in their power to always pay for the unemployment insurance early are usually eligible to get a FUTA tax credit of up to 5.4%, and that can lead to an effective FUTA tax rate of 0.6%. The percentage got back by the employers then depends on the particular state they are doing their business in and whether the state has any outstanding federal unemployment insurance loans. Not all employers end up getting qualified to get the maximum tax credit. If you have any employee working in a credit reduction state, you will be obliged to get the FUTA tax credit reduced. Due dates. You always have to keep in mind and understand that in most states, the FUTA tax shouldn't be collected or withheld from your employees like income tax withholding. Rather, the FUTA tax is something that your business has the responsibility of paying as you are the employer. The FUTA taxes of your employees need to be paid 4 times per year. Quarter 1 payment is due by April 30th, Quarter 2 by July 31st, Quarter 3 payment is due by October 31st, and Quarter 4 payment is due by January 31st. The calendar quarter dates are a representation of the pay period during which your employees got their wages. The due date represents when you have to deposit the FUTA taxes and any income tax that you withheld for your employees with the federal government. Learning the ropes on calculating FUTA tax so you can avoid always using a FUTA tax calculator is not complicated. Although if you are feeling super overwhelmed or too busy to be in charge of managing the state and federal employment taxes alone, you can always choose to get a professional accountant or bookkeeper hired to assist you. Remember, comment and subscribe to our channel. Also visit our website at paystubcreator.net and create your own pay stubs today.